Good afternoon and welcome to CNBC Africa special broadcast of the outcome of Nigeria's Monetary Policy Committee meeting. I am Wole Famariwa. The long-awaited MPC meeting today was initially meant to hold on the 22nd and 23rd of January. However, a dispute between Nigeria's lawmakers and the country's executive arm of government led to key members of the MPC being unconfirmed. As a result, the MPC was unable to form a quorum. Now, all that is in the past. The Senate has confirmed 3 new members: Adeola Adenikeju, a professor at the University of Ibadan; Aliyu Rafindadi Sanusi, a lecturer of economics at Ahmadu Bello University; and Robert Asogwa, team leader, Inclusive Growth Unit at the United Nations Development Program; and 2 deputy governors, Aisha Ahmad and Edward Adamu. The MPC meeting this month follows the confirmation that Nigeria's economic recovery is on track and, of course, a fall in inflation. Nigeria's economy grew by 0.82% in 2017, and inflation has fallen for the last 13 months to 14.3% in February. With improving macroeconomic fundamentals, the central bank is under pressure to ease monetary policy to support Nigeria's economic recovery. Before I cross to Abuja to hear from the CBN governor, joining me in the studio to preview the announcements are Bismarck Rewane, the CEO of Financial Derivatives, and Bayo Omogoroye, Chief Dealer at GT Bank, and Gregory Kronsten, Head of Macro-Economic Research at FBNQuest Capital, will be joining us a little later from our studios in London. Gentlemen, thank you so much for joining us.
Thank you.
So finally, all the drama is over with the appointees. We finally have an MPC this year. Bismarck, just your perspective on the significance of having an MPC after the 2 missed meetings.
It's very important in the sense that 16 months the status quo was maintained. 5 months we said we had no quorum. There was all of this. Now we have a quorum. So the question is that if you end up doing nothing, then what was all the hula baloo about having a quorum, right? So that puts a lot of pressure. On the other hand, if the guys say we need time to settle down, to understand the nuances and all of that before we make a decision, that's another argument. But again, this is not a job for interns. So it's something that for those who understand economics, even if they wake you up from sleep, you should be able to make a call. Right. So this call is, do we need to stimulate this economy to ensure that the recession is left far behind us and therefore we can go into a path of accelerated growth? 1. 2, do we need to wait a little bit to see that things are stable before we make a decision? Or 3, do we need to really believe that money supply can drive inflation, and if we bring down interest rates, increase liquidity, we may have a threat of inflation at this time? Those are the 3 calls.
And of course, those are always the case. It's either to cut, to hike, or maintain the status quo. But just before we move on to what they're likely to do and your perspective on that, do you want to just comment on the new appointees, the new members of the MPC? We have Adeola Adenikeju, a professor from the University of Ibadan; Aliyu Sanusi, a lecturer from Ahmadu Bello University; and Robert Asogwa, who is from the United Nations Development Program; and of course 2 deputy governors as well, Aisha Ahmad and Edward Adamu. I have been speaking to even some past members of the MPC, and they seem pretty happy with this team.
Well, institutionally, these guys come from strong institutions. Ibadan is a solid institution for economics. There's no question about that. So for him to be a professor of economics in Ibadan, he must have something between his ears. Secondly, the guy who works in the UNDP, also UNDP is a very strong institution, and therefore for him to get to that level, he must know exactly what he's doing. Ahmadu Bello University is also one of the established federal universities, and their biggest strength is not in economics, but at least they have pedigree. Right. So I would say, even though I don't know them personally, I've heard about the guy from Ibadan that is good, and he taught petroleum economics. He also taught econometrics. So he should be able to come up very quickly with a call on these things and know what the consequences are.
All right, so let's move on to the calls now. And Bayo, maybe I should start with you. I think overall the consensus view is that there will be no change. To some extent, people are arguing that the MPC members need to settle down, and maybe the argument is somewhat weak. It's more of the fundamentals of the economy and what needs to happen. So what are your expectations today?
Well, I think the most general expectation is that nothing will happen for whatever the reason, whether they just start, this is just their first meeting barely a week after they were confirmed, or that they want to have time to settle down to understand what's going on. Those are things to consider. But at the same time, like Bismarck said, it's been a period where nothing has happened. And these are people that are coming with a lot of pedigree, so you would expect that they can look at the fundamentals, look at what the variables are saying, look at the economy, and see whether a rate cut is required at this point in time, or there's a need to look at it further down the line and decide what the next course of action will be. So I think the issue is a lot of people believe that nothing would happen or nothing should happen, but that's a bit difficult because
would you say the market activity is also suggesting that the market is not expecting a change, and if we were to see a cut today, it will be a surprise?
I think if we get a cut today, the surprise will be in the magnitude of the cut.
Right.
A cut today.
So 25 basis points.
25, 50 basis points, and an indication of what the outlook,
a signal,
a signal would be. Market will take it in stride, but something significant more than that would probably be something the market would definitely react to.
Bismarck, I know you have several scenarios.
No, but
what's the best case here?
My best case scenario is that, look, nominal rates on T-bills have gone down by 385 basis points between last year and now. Okay? So a shift in the policy rate at this time means not that much. It's only a signifying, symbolic, right? 1. 2, core inflation is at 11.7%. So even if you came down by 25 basis points or 50 basis points to 13.5, you still have your policy rate higher than the core inflation rate. Inflation, inflation expectations are that all things point to the fact that next inflation is going to be about 13.5 or 13.8. So we are in a good place. And so nominal rates are down, effective rates are down, the anchor rate going is important. But more than anything else, what the governor says as the direction, right, the guidance, the outlook, will be more important to determine market reaction.
So, but what are you expecting?
I'm expecting a minimum of 25 basis points.
Right, so you're expecting a cut?
I'm expecting a cut.
Right. Okay, we'll see where that
happens. And in addition, I'm also expecting an adjustment to the asymmetric corridor,
right,
to make sure that borrowing,
which is the effective rate, of
yes,
course,
so that you can't borrow at 16% and place in the interbank market at 40%. We need to bring that up to +5, -5, so that it's a symmetric corridor, and that will reduce regulatory arbitrage. I think that's important to note.
Okay, let's talk a bit about the concerns around the currency and foreign investor activities, which is one of the arguments that some have put forward as to why they think that there will be no change today. And I want us to explore that a little bit. Starting with you, Bayo, do you get the sense that if we're to see, say, a 100 basis points decline, not in the MPR, but where Treasury bill rates are right now, the OMO rates and so forth, that we'll see some panic selling from the foreign investors, or at least a slowdown in terms of foreign investor supply of dollars to our market?
Yeah, I think it's possible. The most important thing is what's the threshold of investors? What's their threshold basically? Is the yield at 14% no-go area for them, or is 15% the break-even for them? It's only a function of what their risk acceptance, what risk premium they require to be able to hold the local currency. And the lower that risk premium is, the lower the rates can go without seeing the kind of capital flights that's a concern for most of us.
All right. Bismarck,
the interest rate,
your thoughts on the argument?
The interest rate inflation differential between the dollar and the naira is 11% right now. So as long as you can get 11% return on your instruments, you're okay if you're a U.S. investor. Secondly, hot money is hot money. The truth is that in the month of February, oil earnings to Nigeria was $2.8 billion. In the month of March, the amount of money the central bank intervened in the market was $1.5 billion. So there's still a surplus cash flow. So irrespective of what the international investors do, the oil earnings at $68 a barrel and 1.8 million barrels, we can get by. We don't need, it's just that thing is a bonus. And so the reserves come down. Let us knock off $10 billion from 46.
So are you saying that you think the war chest has been built to a reasonable level that we can manage some foreign investor apathy?
Yes. I'm saying that total, if all the hot money goes away, let's say $12 billion goes away, so we go from 46 to 32. Where were we a year ago in terms of reserves? $32 billion is a decent figure. So you need the courage to make this decision. But what will happen to growth, what will happen to economic activity, what will happen to employment, and what will happen to NPLs. That is what you'll be looking at. Right. When you look at it in its totality, a move to the accommodative stance, nominal and symbolic, is the best option.
Okay, let's get some more perspective from Gregory Kronsten, Head of Macro-Economic Research at FBNQuest Capital. He joins us from CNBC's studios in London. Gregory, thanks so much for joining us today. All right, so if I can just quickly get your perspective, the key considerations as you expect the central bank governor to announce the MPC's decisions. What do you think are the big issues that they will be dealing with today?
Okay, great, thanks. Well, firstly, very quickly, I'm just relieved that we're having this meeting. You know, we can use all sorts of rude words why there hasn't been one, but let's overlook that and say there is one. So that's the first point. Focus for today. Well, the focus today should be inflation, in my view, and but we're not party any longer to the in-house forecast of the CBN. We have our own forecast, of course. That's our job to do. So those forecasts, in our view, warrant easing today. And I've heard this idea that, well, there are lots of new members there. Yes, of course they are, but they haven't, you know, they haven't come from a different planet. They are familiar with an idea as macroeconomy. So I think they have to, you know, just kick off their first meeting and start running with it, I think. So so we're looking for any comments on inflation. We're expecting easing. How much easing? So, well, there's talk, some people say 25 basis points, but you know, the South Africans did 25 last week, but that's from a starting position of 6 3/4 repo. We're starting at 14. So if your inflation expectations are encouraging, and you want to send a signal, I mean, my way of looking at it is 25 isn't very much. So our hunch, for what it's worth, is we're going to see 50 basis points. But obviously we have to wait to see what the governor has to say. The other point quickly make about growth, 2 points, growth from foreign investors. Well, growth, obviously any rate cut is beneficial for growth. That's no big secret. And foreign investors, I mean, I think what happens, you know, is that like every other species, you have different categories within the species. So some investors will think, oh, well, I think Bismarck mentioned the differential was 11, I think I heard him say. Well, I mean, 11, if you're an emerging market investor in government bonds, 11 looks quite nicely. Where else are you going to get 11 and have confidence you can get your money out? So I think, you know, there are different, what I'm trying to say is that we shouldn't think everybody's going to rush to the door at the same time.
All right.
In
fact,
fact, I'm
get your
saying
perspective
I don't
on.
think going to be rushed.
All right, Greg, we'll come back to you in a moment, but Bismarck, I just want to get your perspective on, you know, the scope for actually some strengthening of the currency, because you've made the point about the exchange rate, about the build-up in reserves.
Yes.
And the next thing I think people will expect at some point is that the central bank will allow, because we know that they constantly impact the direction of the currency by their intervention in the market, that they may allow some strengthening of the currency. Yeah.
Yeah. Okay.
Do you think we're close to that, or do you think that all the concerns around the elections and what could happen?
But I don't think if you do it, it will be interpreted as a politically motivated move. But here's the thing: the rate of exchange they use now for the federation account has gone from 305 to 325, and that's significant. If you take that and take the intervention rates, the weighted average exchange rate today is 340. The crude PPP exchange rate is about 335. So in reality, the currency is undervalued, right? But you've got to put a risk premium for political risk and all of that. So where we are now, you could appreciate the currency and you'll still be able to meet all the demand, but you're just wasting resources. The thing is to allow for this time and then gradually allow kind of a dynamic equilibrium, because we do not know what's going to happen to oil prices. If oil prices were to decline, then anything will happen. So I won't think they'll be as courageous enough to allow for an appreciation of the currency. Right. To achieve what?
Okay, but what about this argument? And Bayo, I'd like to hear your perspective on this. There's been so much talk about trying to harmonize the exchange rates in the market. We know the central bank, for instance, is offering dollars at a different rate for retail SMEs and so forth. But what I've heard is that some of those offers are actually forward contracts, and if you check the pricing, the effective rate is pretty much where we are at 360. Do you think there's a case for some harmonization of rates now, given the dynamics of the market? Would you say that we might as well just have one rate?
Well, I think for a lot of people in the market, having one rate is the ideal. Yeah, it's the ideal. You can also argue that they're trying to, in line with all the moves of trying to grow the economy, they're trying to keep the rates low so that they can add it to part of their intervention activities. At a lower exchange rate, effective rate is higher for the businesses, but the businesses would add their opportunity cost on the naira separate from the effective exchange rate. So they would say that the rate is lower, nominally, right? So the cost of goods is lower. But the real terms is that the money also has a value. And that's where the harmonization comes from. But for a lot of people, the thought is that they're trying to intervene, use it as one of their intervention activities to try and stimulate the economy, to try and stimulate activities. And to an extent, we can say that is successful. Now, if they do harmonize it without so much growth going on, would they have a strong negative impact? I think that will probably be a question that will hold them back.
Right.